Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive analysis of Prudential plc, ticker symbol PUK, a major player in the global insurance and financial services space. If you're looking to understand whether this stock deserves a spot in your portfolio, stick around because we're covering everything from financials to recent performance and long-term potential. Let's get started. So first off, let's set the stage. Prudential plc is a well-established name, and I'm excited to break down what makes this company tick for investors like you and me. We're going to look at their business model, dig into their numbers, and see how they're positioned in today's market. Whether you're a long-term holder or just curious about the insurance sector, this analysis will give you the full picture. Let's kick things off with a quick overview of who Prudential plc is. Founded way back in 1848, and headquartered in London, UK, Prudential is a heavyweight in life and health insurance, as well as retirement and asset management solutions. Their primary focus is on high-growth markets in Asia and Africa, though they've got a solid footprint in other regions too. With over 15,000 employees, they serve millions of customers through a mix of agency sales, banks, and brokers. Their mission? Helping people secure their financial futures. Pretty critical stuff. Under the leadership of CEO Anil Wadhwani, they've been pushing hard into emerging markets, which we'll see reflected in their numbers. Now, let's talk revenue. How does Prudential make its money, and where is it coming from? Looking at their 2025 full-year results, they reported a staggering $20.65 billion in revenue, a significant jump from $8.14 billion in 2024. That kind of growth catches the eye, especially in a sector that can sometimes feel stagnant. A big chunk of their business is tied to life and health insurance products, particularly in Asia, where demand for financial security is booming as economies grow. While I don't have a detailed geographic breakdown for this year, it's clear from their strategic focus that Asia and Africa are key drivers. This aligns with their long-term bet on emerging markets, which could be a massive tailwind if executed well. Moving on to earnings, let's see how profitable Prudential has been. For 2025, their net income came in at $2.96 billion, up from $2.29 billion in 2024, translating to an earnings per share of $2.30 compared to $1.68 the year before. That's solid growth, and it shows they're not just boosting revenue, but also translating it to the bottom line. Over the past few years, EPS has been a bit of a roller coaster. Think 2.48 in 2023, but a loss of $1.48 in 2022. The key takeaway? They've bounced back strong, and their focus on operational efficiency seems to be paying off. This kind of consistency and recovery is what long-term investors want to see. Let's also touch on some insights from their recent earnings call for the first half of 2024, since it gives us a peek into management's thinking. They highlighted an 8% growth in new business profit, driven by strong demand in Asia and Africa. Management was pretty upbeat about their strategic initiatives, like digital transformation and partnerships, which are boosting sales channels. They also emphasized capital discipline, aiming to balance growth with shareholder returns. It's clear they're playing a long game, focusing on sustainable profitability rather than short-term wins, which I think aligns well with a conservative investment approach. All right, let's dive into the financial statements for a closer look at Prudential's health. On the balance sheet, as of 2025, they're sitting on $157.48 billion in total assets, down a bit from $181.88 in 2024, which might reflect some portfolio adjustments. Their cash position improved to $5.72 billion from $2.45 billion, a nice buffer for any unexpected challenges. Total liabilities are hefty at $141.63 billion, but that's typical for insurance companies with long-term obligations. Equity stands at $14.93 billion, giving a debt-to-equity ratio of about 0.3, which is quite manageable. Return on equity for the trailing 12 months is a healthy 26.87%, showing they're generating good returns on shareholder capital. Cash flow-wise, 2025 operating cash flow was $1.69 billion, with free cash flow at $1.61 billion, strong numbers that indicate they've got liquidity to reinvest or return to shareholders. Overall, the financials paint a picture of a stable, well-capitalized company. Now let's talk valuation. How much are we paying for this business? Prudential's current price-to-earnings ratio for the trailing 12 months sits at 13.55, which is well below the industry average of around 45.68 for life insurance companies. That suggests PUK might be undervalued compared to peers. Their price-to-sales ratio is 2.33, and with a forward PE for 2026 estimated at just 9.02, the stock looks even cheaper based on future earnings expectations. Dividend yield is modest at 1.69%, so income investors might not be thrilled, but the low valuation could offer capital appreciation potential. At a market cap of about $36.1 billion, I think there's room for upside if they keep executing on growth. Let's break down Prudential's position with a quick SWOT analysis: strengths, weaknesses, opportunities, and threats. Starting with strengths, their 8% growth in new business profit is a standout, especially in high-growth markets like Asia and Africa. They've got a strong brand and a diversified product lineup, which helps weather regional downturns. Weaknesses? Their heavy reliance on specific regions could backfire if economic or regulatory challenges hit hard. Think Japan, where they've had recent sales suspensions due to employee misconduct. Opportunities are massive, though. Emerging markets are still underpenetrated for insurance, and digital transformation could lower costs and boost reach. Threats include regulatory risks, like in Japan, and broader market volatility that could impact investment returns. Overall, they're well-positioned, but not without risks to monitor. Looking at recent performance, Prudential's stock has been on a tear over the past year, up 70.67%, which is incredible compared to the broader financial services sector's 7.75% gain. Shorter term, it's up 7% in the last week and 16.1% over 6 months, though it dipped 1.46% in the past month. Long term, the 5-year return is negative at -19.75%, reflecting some tough years, but the recent momentum is hard to ignore. On the chart, we're seeing strong upward trends with solid volume, though I'd watch for any pullbacks as potential buying opportunities. If you're considering a short-term move, the current momentum suggests strength, but keep an eye on broader market conditions.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.